Good morning, Wall Street winners. It is Monday, April the 7th. And boy, I don't know about you, but it feels like we've been through 3 years in one here. Things are just moving at a pace that is accelerated, and yet it feels like you can't get through it fast enough. It's a weird mindset, at least that I'm finding these days. We wake up this morning to see the futures markets paring back some of their losses from last night, which is positive. But keep in mind, we're still off 2.7% in the S&P 500, 3.08 in the NASDAQ, and 2.53 in the Dow. So we're all three indexes are definitely well into the red heading into the week. And this is all about the tariffs and that they remain unresolved. We've heard from the president as he went off to watch golf at the LIV tournament in Miami and stay down at his palatial compound in Mar-a-Lago in West Palm Beach this weekend, that over 50 countries have reached out to negotiate new trade deals. Now, we have to take him on his word for that because we don't know that that's actually a factual statement. He makes a lot of statements with numbers that are honestly quite erroneous and can be very hard to believe. He's definitely probably the most fact-checked individual out there from a political standpoint that we've seen in history. But we are coming off some of these futures losses. We're still going to, looks like, start off well into the red today. But in my video yesterday, I talked about 3 different things that could cause the market to potentially stop the bleeding and maybe start to look at turning in the other direction. At least stopping the bleeding is a good first start. I mean, if you think about how you triage patients in a hospital medical setting or that are injured in some type of bombing or something of that nature, you look for the worst case scenarios, the ones that need the most help, and you try to stop the bleeding. And that's what we're trying to do here in these markets. Now, obviously, trying to change the trade dynamic that has been in place for almost 100 years is a difficult thing to do overnight. It's not going to happen overnight. Negotiations, if that's ultimately what the president and the new administration wants, take time. These negotiations can take 3 to 6 months to get in place. So that's one of the ways that will potentially resolve where we are, but that bleeding will cause multiple deaths, or in this case, financial losses from probably millions, if not maybe tens of millions of different individuals and corporations. So the two fastest things that can be done is something can happen to President Trump to get him out of office, or we can see the U.S. Federal Reserve lower interest rates. And now the traders on Wall Street are betting that the Fed is going to cut rates. So they're betting on one of the 3 that I talked about in my video on last night, Sunday, April 6th. So you can have a look at that if you like. And that video went into detail on how that may correct things. But that's what we're seeing in terms of market narrative today. Now, we're at an interesting point because we've had the worst 2 days. This will be the 3rd day, but we've had the worst 2-day run of negativity since 2020. And when that happened, it was kind of an uncontrollable event. It certainly, we don't know at this point. There are many people that believe, but we don't know if this was planned and caused by any government or foreign entity. And so with something being unplanned and unforeseen, the Fed has a tendency to jump in and try to rectify the situation. This was clearly planned. So lots of talk about this in the election campaign leading up to President Trump's win of the election. And then lots of Trump talk during his first couple of months, and then lots of lead up. He even called it Liberation Day, gave you a couple weeks, if not a month's notice coming into that. So we had a fair bit of notice on this. We just were too optimistic to believe that he was going to do it. And then on Liberation Day, to see the way in which he reached the percentages and the numbers, well, it was shocking. It was contrived. It was bizarre, but as many things are. There's no rhyme or reason to some of these things, even though he has put some smart and, from a business perspective, successful people into roles of Commerce Secretary and Treasury Secretary. But all of this trade dynamic shift is going to continue causing the markets to bleed out. And you need to understand that it's not over, and it's still a good time to look at buying puts in the market. And puts are investments where you believe that things will get worse, markets or indexes will go down. You can buy them on individual stocks, you can buy them on indexes. But now is probably a good time to be doing that. Or you could be looking at really long-term calls, like calls through till October, November of this year, for stocks that you feel will either be less scathed from the tariffs and implementation of tariffs, or that you feel have the prospects of very good earnings, hence being unscathed, in the coming quarters, and that will stand out amongst the other stocks that are going to get hammered or continue to get hammered. And those could be calls that end up being in the money towards the end of the calendar year. You could even buy them into the next calendar year. You pay a premium for the more time between today when you buy them and the day that they expire. So we are still seeing a great deal of optimism in the market from the different analysts and investment management companies out there. Most of them are still predicting the year at the end of this year, by December 31st of 2025, the S&P 500 will still close up in, say, the mid to high 5,000 range. And it dropped below 5,000 today. It's down at 49.92. I believe the 200-day moving average on the S&P 500 has it down at 4,800. I believe we're going to cross the 4,800 mark before things start to get better. And when we do that, after that time period, not at that time period, but after it crosses the 200-day moving average, we're going to find a bottom. We just don't know when. It could be a day, it could be 3 days, it could be a month. And that's what I'm watching right now, is for when that bottom will occur. It may not be the only time it bottoms. It may then pop and bottom again, pop and bottom again. Depends on really what's being discussed and what the narrative is in the market at this point or at that point. So we've got a lot of people coming out like Jamie Dimon here asking for tariffs to be resolved quickly. But again, based on everything that Donald Trump is saying, it doesn't seem to be the direction that he's looking to move in. He doesn't seem to be concerned. And that leads us to the most important part of this video, and that is that if things don't change soon, it's very likely that the soft landing that the Fed has done an amazing job at orchestrating and getting the US economy into will basically dissolve or blow up on them and will turn into a period of stagflation. And stagflation, other than the Great Depression, which kind of is one and the same, but obviously a Great Depression much worse with the stock market collapse. But the stagflation is where we have stagnant economic growth, high unemployment, and high inflation. And that appears to be the direction that Trump is moving the market in right now. And that will be a market killer going forward, and an economic killer, and a family unit killer due to the number of families that will be forced into a state of financial despair. So that's something that we want to avoid as we move forward, and hopefully he'll realize that with the support of the smart folks he has in his cabinet. So that's where we are on April 7th. I'm not going to look at individual stocks today because I don't believe it's a good day to be trading today. If you have sold all your positions, congrats. If anything, I would be looking at put positions going forward because I don't think we're through the bleeding until the end of this week when we start to get earnings information out of the large financials. But even then, we're going to need good earnings, good revenue, and a positive future forecast. And having all three of those, the trifecta, it's going to be really hard to do in the state that we're in right now. Good luck in your trades. And if you're liking these videos, please hit the like and subscribe button.